So if you guys can sort of like turn your volumes up, because it won't be as loud as it will be because it doesn't come through the Zoom. So I'm just going to play that first and then we'll talk a little bit more about it.
Budgeting. Budgeting might not sound like the most exciting way to spend your time, but do it right and the time you spend budgeting will help you to manage your money more effectively, which can then spend to do things that do excite you. Here are 7 simple steps to guide you. Step 1. Keep your eyes on the prize. Or to put it another way, start with the end in mind. What are you budgeting for? Maybe you're trying to find ways to cut back so you can stay on top of your bills and don't run out of money before payday. Or perhaps it's so you can save for something exciting, like a long-awaited holiday. Whatever it is you're aiming for, write down your long and short-term goals to help you stay focused. Step 2. List all the money you have coming in and everything you're spending. That includes all those small day-to-day expenses, plus fares on rainy days, the takeaway coffee after a late night. List it all out. Step 3. Next, look at your list and identify what it needs and what it wants. Needs are your must-haves: rent, travel to and from work, groceries, and household bills. Wants are the things that are nice to have, but then if you're really honest with yourself, you can live without. Streaming subscriptions, meals out, your daily frappuccino. Step 4. Now it's time to create a budget. Work out how much to allocate to your needs and plan how much you can afford to spend on wants, or put into savings pots for those bigger goals. Plan your budget around payday and make a week-by-week strategy. You might not get it spot on first time, but this isn't a test. Just make your best guess so that you're ready for step 5. Put those plans into action. After all, it's only by living on your budget that you'll suss out what's working and what needs fine-tuning. You may find that you don't miss that gym membership at all. Free online exercise classes do the job just as well. You might even discover other savings as you go, or that you haven't allowed enough for certain needs. That leads us to step 6. Go back over your budget. Just because it's written down doesn't mean it can't change. Sense check your plan as the weeks pass. Is there a cost you've forgotten about? The car's MOT, for example? No sweat. With everything tracked in your budgeting app or on paper, you can see what you can shift around to make space for the one-offs while keeping your long-term goals in sight. Finally, step 7. Look ahead. Keep checking your budget to make sure it evolves with you. Hopefully you'll start to tick off some of those short-term goals, but that doesn't mean you won't have a new target on the horizon. Budgeting.
So lovely. So there's 2 different types of budgeting that you can do. So there's piggy banking. So this one is where you will sort of have little different pots, and you can obviously put the money away for certain things. So some people have pots away for holidays, some of them have it for like car repairs, emergency funds, those types of things. So they tend to separate their money out to make sure that they're obviously not spending it all in one go. And then there's the 50-20, 30-20 rule. So obviously 50% of it will go on sort of like the necessities, 30 will go on sort of like savings, and then the rest would obviously go on sort of the wants instead of the needs. So that might be sort of going to the cinema, having meals out, those types of things. So these are 2 that are obviously quite familiar, like budgeting methods that people use. But it's also some people obviously use apps, and obviously their banking also has it built in with them. So I know that the NatWest, Monzo, some other banks all have it all programmed into their apps now. So it will track where you're spending it, where your spending is, categorize it where you're spending it, and you can set budgets and see how you compare from month to month basis. I'm going to open it up a little bit so people can unmute. Is there any other techniques people use for budgeting at all?
I don't know if anyone is gonna go, but I would
Yeah,
say that from you know, I also know that a lot of us also use contribution. So a group of friends could come together
yeah,
on a monthly basis, do like £50 each.
yeah.
Every month, someone just gets, the bulk of the money and they do
Yeah,
it till it runs out. Yeah.
yeah, I'm very familiar with that because I have a lot of people who are of like obviously are from Africa and do use that
Yeah.
contribution. Is quite big in sort of your culture. So I have a lot of people who are in church or in communities that do the contribution and they sort of help a certain person at a certain time when they need it. So I've had it where customers have come in and said they wanted to bring their son over from Nigeria. So the church then contributed to that and things like that. So that's a way also a little bit to like help you. So that's a little bit like piggy banking because you're putting the money away for a
Yeah.
certain thing. So no, it's very familiar, but no, that's perfect. Thank you.
Yeah. I think I've got Mustafa's and or perhaps he has
Yeah,
something to say at the back of that. Yeah, Mustafa, go ahead.
Thank you, MW. Thank you, Chloe. So, for me, with budgeting, I refuse to be a techie in budgeting. So I still do my budgeting my manual way. I use the
yeah,
notes on my iPhone, and I just like write down everything. Even sometimes what I do is, because just like you said, I have some bills that I know every month I need to pay this, and I know some that just pop in once in a while. So all I just do is like I write it down, and then
yeah.
I have somewhere in my notes. So like I've got record of like my income and expenses for like the past 2 years. So I just dump it in my notes every time, every month. So I don't use any app for now.
Yeah, no, that's a really good. Obviously, you've got a lot of patience to be able to do that. That would honestly, I'm not very. Let's just say I'm not very like analytical. I don't even like going through my statements to look at what I have in and out of my accounts each month. So I do use sort of like the budget trackers and things like that. But no, so you can actually get if it's not something that necessarily you wanted to take the time to do every month, you can actually get apps now that you can add multiple banks into and it will do it for you and things like that. So obviously on the screen now that you've got obviously budgeting templates, budgeting calculators, budget trackers and budgeting apps. They all do sort of the same thing, but it's also you've got to understand what you want to actually budget for. Is it just making sure that your paycheck is sort of lasting to you to the end of the month? Is it to pull back so you can obviously make that adjustments with bills rising and things like that? Or have you got an end goal in mind that you're trying to save for? So by you budgeting means that you can save a little bit more. But these are the sort of things that you can use to help with that budgeting. So now we are going on to the savings section. So it does lead quite nicely in from budgeting. So we're going to look at some moments worth saving for. So everyone has different personal sort of goals and plans that they want to try and achieve, whether that is in a short-term period or a long-term period. But these are some of the moments that obviously you can start saving for. So going on holiday, and I'm an avid holiday goer. I always save for my holidays so I can have multiple a year. New car or first car, depending, but that could also be for children or any family members. University, so obviously whether that's you wanting to go or obviously another family member. Buying your first home. This is obviously one of the biggest financial journeys that probably people will ever go through. It's the biggest amount of lending that you'll ever do, and obviously you need to save before you do it so you can have that deposit to get that home. Getting married, that's really important to some people as well, and obviously saving to be able to do that. Becoming a parent, so some people might not get extended maternity pay, so they might want to save to be able to afford it. Buying things for the babies. Later on in life, so we're talking retirement and what your plans are for after you're working full time. So what about the unexpected? So we always talk about in these, when we talk about savings, we always talk about an emergency fund. So have you got an emergency fund? So we always say it's like 4 months worth of your salary is sort of like a buffer that you should consider if you are going to sort of invest long term or anything like that. But obviously there are unexpected expenses that come each month. So we talk about sort of having that little emergency buffer there just in case. So like if there was a broken boiler, car repairs, pet emergencies. When I do my reviews with customers, they always go to me, oh, how much is an emergency fund? And depending on their situation, I normally go, how much is a broken boiler? How much it would be to replace your roof if it was to fall off? Because they make your house uninhabitable. But those are the types of unexpected expenses you should look out for when you are trying to save, to make sure you do have that buffer there, so you can obviously have a look that you've got that money set aside, that you haven't got to worry in those situations. So saving strategies that people tend to use. So planning your spending with budgeting. So obviously this is a way to obviously look where you can cut back, and maybe obviously have a little bit extra for saving. Using energy saving tips to reduce on bills. So obviously with the rising of bills that went up, maybe like a year and a half ago, 2 years ago now, loads of people came out on social media with loads of different money saving tips. That I saw one that you could put tinfoil behind your radiators, and it amplifies the heat. So there's lots of money saving tips on there. Looking at alternative providers, especially with sort of bills as well. So like your energy provider, like Virgin, Sky, if you do your TV, your phone provider as well. Because sometimes if you are with them for a while, we always change our car insurance and those types of things. Why would we look elsewhere to change our bill providers? Then reviewing your direct debits. This is actually quite a big one. A lot of customers come in and they don't review their direct debits from sort of like a month to month or even year to year basis. And people end up paying for direct debits that they don't even know about. So it might have been an insurance for a home appliance that they had maybe 6 months ago and it's broken and they've replaced it, but they're still paying for the insurance for the old one. And then they're the types of things that then tend to mount up when you have multiple of those. Then round up your pennies. So obviously I know you guys probably don't all, or if any of you bank with NatWest, but we do have a feature called roundups. And what this does is when you are paying for stuff in stores, it will round your purchase up to the nearest pound. So for example, say if you go buy a coffee for £4.50, it would round it up to £5 and put that 50p into a nominated savings account that you have asked for. And basically you're getting interest on saving that little bit of change. So obviously when we used to use cash quite a bit, especially when I was younger, I used to use cash quite a lot. I used to save my pennies and my pounds and things like that in a piggy bank. I used to cash it up just before Christmas and I used to pay for my Christmas presents for it. This is a virtual way of doing it because a lot of people don't use cash anymore because card is so widely accepted. So it's a virtual way to do that. Setting up standing orders. So you can set up standing orders to have money going out into certain accounts. So when we were talking about that piggy banking, having those money buckets or those money pots, it obviously, if you set up a standing order for say like payday, it will obviously, that money will go out automatically. I always say savings is a little bit of a mental game for people. Some people find it really hard to move that money into it because they're always worried that something may happen at the end of the month or they may need it. So it does, your mind does stop you from putting it in. Whereas if you set up the standing order, it sort of takes that mental aspect away from it. And then obviously you've got the savings buckets. So obviously that's where the different pots are, where you can set one that says holiday, deposit, car, whatever you're trying to save for. And then obviously you'll have those separated so you know what savings is for what. So now we're going on to a bit about the savings accounts. So we have a few different savings accounts that obviously you can use. So we've got instant access accounts. So these are sort of your accounts where you can access the money at any point. You can sort of put in as much and as little as you want each month. But if you haven't got the money to put the money in, you don't have to in a month. Then you've got your regular savings accounts. So these ones are where you set up a standing order and a regular amount goes into them each month. Then you've got fixed rate accounts, which tend to get locked away for a period of time. So it means you can't add or remove the money in that period. And obviously it potentially could come at maybe a higher interest rate. And obviously you tend to sort of lock away a little bit of a larger bulk of money. And then you've got ISAs, which stand for individual savings accounts. So these are actually are run by like the government. So the government give you 20,000 a year that you can put into an account that has tax-free interest. So in the UK, if you are earning over a certain amount of money in interest from your savings accounts or investments, you do actually have to pay tax on it. So this account allows you to have a £20,000 tax reliever on your money, and you can earn any amount of interest on those accounts and not have to pay tax. I'm going to open the floor up now because I have spoken quite a bit about savings already. But does anybody have any questions about the savings accounts that we've just gone through, like the different types or anything like that? No, we're good?
Yeah, Chloe, sorry, just to clarify.
Yeah.
So does it mean that if I've put 20K in another account that is not the individual savings account, then I would have to pay tax on whatever the interest is?
Not necessarily. So it's a real big thing. So no, not necessarily. So the bank do give you certificates of interest after every tax year, and the tax year runs from the 6th of April to the 5th of April on a yearly basis. So we've just done a tax year and started a new one. So you get certificates of interest. Depending on what tax bracket you are on, it depends on how much allowance you have before you have to pay tax on it. So it's a little bit like your tax code around your employment and things like that. It's the same with savings. You can obviously do a lot more research into this because obviously from the bank we know a little bit of it. But obviously we are not accountants and solicitors and things like that. So you can do a little bit more investigation about it. But what I would say is the top tip for that is to get your certificates of interest from your current from your savings accounts for like the last tax year, and have a little look that way. If you are really worried, then obviously contact HMRC and they will be able to tell you. But most banks do not tax at source, so it is your liability to do the tax on that. Any other questions at all about those savings? Sorry, someone's just asked a question.
Yeah, I've got one in the chat. Can you have a standing order on a current account?
Yes, you can. So you can have a standing order going from your current account into a savings account, and you can have a standing order going from a current account to a current account. So my partner pays for Spotify, which he does a family package for. I have a standing order each month that is £3 that goes out each month into him to pay my part of the subscription he pays. But also you can set up one for your savings account. So I have one that's £150 that goes out each month, and it goes out on the date that I get paid, so I don't even see it.
Yeah, that's fine. I've got another question before that one. Mustafa says, can you help type the name of the budgeting apps? I think that's relating to the budgeting that we've had. Yeah. So you want the names of some budgeting apps?
Yeah, I have got the names on them on the back of this PowerPoint, so I will send them out.
Right.
Towards the end, if it's not towards the end, I will definitely send you out, Deborah, a email with them on, so that they can obviously obviously look at them and open them up.
Yeah, that's fine. Thank you. I've got another question, even though I'm not sure. Well, please, I would like to know if I would have to pay tax on my savings in my company's account. Would you be able to take that?
So unfortunately, business isn't my side of it, so I do more personal. But my answer would be to you, if you're unsure whether you have to pay tax on your business savings account, that should be something that comes up when you do your tax return every year when they look at your company holdings.
Yeah, I totally agree with that. I think that as a company, you've got to pay tax on your profits.
Yes.
So anything after you've paid tax on your profits, that's that, whether it goes into your savings or not, or dividend, whatever it is, but you've got to pay tax on your profits.
Yeah.
Morenike says, what type of accounts yield interest monthly, and how much can be put in the account?
So by yield interest monthly, is that by giving it back to them, I'm guessing?
It's just like what kind of account would she have with any bank that would she would earn interest on? Most current accounts,
Yes.
you don't earn interest,
No.
Yeah.
No. So when you're holding money in accounts, it is obviously it's not preferable to have a large sum of money in current accounts, because one, they don't give you interest, a lot of them, and two, obviously it's not very safe. You're walking around with a plastic debit card with a large sum of money on it. So most savings accounts will give you some sort of interest. Whether you wanted an instant access one, a regular savings account, a fixed, or an ISA, there was always a savings interest rate attached to it. Depending where you bank is depending whether what one would probably be more beneficial to you. But that is something obviously you would have to look at yourself, obviously depending on where you're banked. But most savings accounts in the UK do give you interest rates at some rate, and it just depends on where you're looking to do the savings and where you would want them. But you can obviously go on the internet and sort of Google the best interest rates for savings and things like that. I don't know if you guys watch Martin Lewis. He's a money saving expert. He does quite a lot on his website with links and things like that. We've been featured on there quite a few times, NatWest, but he does lots of links to like the best interest rates, the biggest save on like energy, power of attorney, those types of big things, all financial.
Right. Thank you very much, Chloe. I see that Andrew's got his hands up.
Okay.
Andrew, you have the floor now.
I think I understand the previous question about
Sorry, I didn't hear that, Andrew.
Yeah, you're a bit low. Your volume is a bit low.
Can you hear me now?
Yes, that's better.
Oh, great. I think I understand a bit about the question about the company's accounts. The person is trying to, but I don't know whether you're still comfortable to answer that. The person is trying to ask if a company has not started operating, they just want to save together. It's not current account, it's a savings. They are trying to save to purchase what they will start with. So each, probably 2 or 3 persons come together to form a company, and they are saving in the account of the company. So will they, since they are not started operating, will they be able to pay the tax on that money they are saving, not the money they are earning?
Yeah, I'm pretty sure they can. Again, it would have to be going through an accountant to see whether what they would be able to do, because obviously their company's not trading, so I'm not too sure. But if you're my information to them would be going speaking to an accountant to know where they sit with the tax laws.
Yeah, thank you very much, Chloe.
Yep. Are we all good for
I think that's all the questions now. Yeah, so
lovely.
that's back to you. Oh, no, sorry. Actually, there's another one. I have a current account. Can I open a savings account using the app?
With NatWest?
Oluwamuyiwa, Chloe is asking if it's with NatWest or any other bank. If you can just quickly unmute or put it in the chat. Nothing has come through yet, so maybe we go on and if he responds, then I'll just bring the question back to your attention.
Yeah, no, that's okay. I have got the chat up on the side of my screen anyway, so I can see it coming through. So this is a bit of a jargon buster for people that maybe hear these terms and phrases when you see adverts for financial products or services, or whenever you come into the bank. So there's quite a few on there. So I'm going to start with some sort of more like basic ones, and then go up to sort of the more maybe a bit more complex ones. So instant access, that basically means that you can access your money at any point. So that means you can add, remove, do anything. It's very flexible, instant access. So it means that if you wanted £10 out of your account, then, or if you wanted 10,000, you'd be able to access it. Then you've got your fixed terms. So fixed term means that it is fixed for a term of a period of time, basically. So these can be anything from a year to 5 years, depending on what bank you're going with, what type of products and services they're offering. But it means you can't add or remove the money within that period. Then you've got personal savings allowance. So this is going back to sort of what your allowances are, and what your ISA allowances are, and what your personal savings allowances are. So your ISA allowances every year is £20,000. Your personal savings allowance is talking about the tax that you're allowed, and then after that, what you would then have to pay tax on. Then you've got the interest rate on savings. So I explained that a little bit briefly. So interest rates on savings is a percentage that we will give back to you for holding your money in our savings accounts. So you are earning money by keeping it in an account with us or with a bank, building society, whoever it may be, and they're giving you an income basically for having that money there. Then you've got FSCS. So this is the financial service compensation scheme. So this is a scheme that runs across all probably major banks in the UK, and it means you are covered up to 85,000 if the bank was to go under. By what we mean by that is if the bank was to go bankrupt or whatever it means your £85,000 of your money that you hold in the bank is protected. So I don't know people here, but people with maybe larger sums of money tend to have multiple accounts in multiple different banks, and this is why. So that they are protected. Then obviously you got AER, which stands for Annual Equivalent Rate. So this means that basically it's a type of interest rate used for savings accounts, illustrating potential annual return, taking into account how frequent interest is paid or compounded. So what that means is obviously, I don't know if people know how sort of interest works, but interest tends to be paid out for working days of the month. And then the AER sort of levels it out with the compound interest and how many days of the year there is and everything like that. So then we're just going to touch briefly on pensions. So obviously, I'm sure most people know what a pension is. So a pension obviously is a long-term savings for later on in life, offers tax-efficient savings for the future, financial needs, and essentials for fulfilling retirement after work. We don't do a lot about pensions because it's a service that requires a lot of people want advice on it, and obviously I am non-advised, non-impartial. So we don't do a lot on it. But if that is something that you are looking to have a look into, there's lots of obviously financial advice you can have a look on online, or obviously seek a financial advisor to see if that's something that they can help you with. So now we're going on into the borrowing basics. Any other questions before I go into this, because this one's also quite a lengthy section? No, all good? Perfect. So with borrowing basics, we're sort of going to talk through the basics basically. So I'm sure most of you will know what these products or services do. So we've got credit cards, overdrafts, mortgages, loans, and loan sharks. So the first four would probably be quite self-explanatory. You've either heard someone or had one yourself, or family members have had probably one of these products. So credit card is a card that you can use to purchase or balance transfer other credit card balances onto of an agreed limit, and obviously it has an interest rate attached to it, and obviously you either pay the minimum or the full payment each month. Then you've got an overdraft, which is a pot of money, how I like to explain it, a pot of money at the end of your money. So if you obviously was to run out of your money in your current account, it would mean that it would allow bills and those types of things to still be paid out, and that it would be like a little buffer. Then mortgages is obviously a big lending, and it's a long-term lending compared to the others. The others are short-term, but this is long-term. So you tend to have a mortgage for anything from 10 to 40 years, depending on your situation. And obviously you put a bit of deposit down, and then the bank would then lend you the rest of the property value. Then personal loans, these tend to be for bigger purchases. So it tends to be for like cars, holidays, home improvements, debt consolidation, and it's a structured repayment over a period of time. So you know you're going to be paying that much a month back each month for that many years, and it's that interest rate, and it's sort of fixed. And then we go on to loan shark. So this is the one that you guys might not be as familiar with. So this is these are illegitimate companies, so they're not legitimate. Illegitimate companies who sort of offer loans to people in vulnerable situations. So people who can't get credit, or who have poor credit, who are in vulnerable situations, who need to get cash quickly. And the interest rates tend to be double, triple, quadruple times what the banks would lend. And they tend to use like pressure tactics and prey on those vulnerable people. So obviously, if this is like sort of happening, there are like citizen advice and things like that that you can go to obviously have a look at seeing how do you get yourself out of it with advice and things like that. But those are the types of things that will be offered. I don't know if you've ever seen them on the streets, but there's like loan places that offer you loans for something like 120% APR. And yeah, they're the type of places. Any other questions about these? Any other questions? Are we all good on that section? Lovely. So this is about understanding your credit score. So credit score is a real big part of lending and being able to borrow money. Sorry, Deborah, were you going to say something?
Oh, no.
Oh, lovely. Sorry, it's
Go
just
ahead,
off you. I was trying to be aware. No, that's fine. So yeah, credit score is a massive thing when it comes to lending and sort of having things on direct debits. Even people don't realise that. So like when you get car insurance and you pay for it monthly, that does a credit sort of search on you to make sure you are able to fulfil those payments each month. So things that can affect and contribute to your credit score is missed or late payments. So this, obviously, if you're not on time with paying your debt back and you're not showing that you're responsible and you can do that, obviously it then obviously shows that maybe you're not as a responsible lender as maybe someone else. How much you owe lenders, so you can have a view of that on your credit score. So it will tell you that you may have a NatWest credit card that you owe 4,000 on. You might have a car finance with another few thousand on, and it tells you all those bits of information. Also, it tells you if you're defaulting or breaking credit agreements, going over your credit limits. So obviously most stuff has a credit limit, and if you go over it, that will tell you on that. How often you withdraw cash from your credit card. So this is something that we don't advise people to do, because obviously it comes with added costs and things like that. And then excess credit applications. So if you're constantly doing credit applications, these are constant credit searches you're having on your file. So it could obviously be looked to a lender that maybe you're in need of the money quite desperately, or you could maybe not be able to manage it. But it just depends on obviously your situation. We're going to go through some do's and don'ts. So do's with your credit score, get on the electoral roll. This is quite an important one. It means that you have a fixed address and obviously shows you a social history of that address. Review any accounts that you don't use. So if you've opened accounts maybe when you were younger and you're not using them anymore, have a look at them. Do you still need them? If not, you can obviously close them down. Check your credit report. So this is an important one. So your credit report tends to renew every 30 days. So it will update with any new credit information, balances. So if you paid off your lending and things like that, it will update every 30 days. And then also consider eligibility checkers. So when applying for credit, most companies now will allow you to do an eligibility checker before applying for it. And this, what it does is it does a soft credit search on you to determine whether you're able to have that lending facility at a certain amount. So let's say for a credit card. So if you were applying for a credit card, it would do a soft credit search on you and say, we're able to offer you X amount of money to spend on a credit card. But if it doesn't, it means it's not impacting your credit score. Then don'ts is miss payments, apply for credit too many times, or go over your credit limit. So these are the couple of the 3 don'ts that they suggest that you shouldn't do. This is a little bit more interactive now. So there is a QR code on your screen. We're going over the credit limit. Okay, so just questions come up. So could you please explain more of going over your credit limit? So going over your credit limit is, say if you had a credit card, this is how I best can describe it for people. You have a credit card and there is a credit limit of £3,000. And you spent £2,995, but you're not paying down the credit enough, so you're making minimum payments, the interest is going to make it go over the credit limit. So then you'll see on your app or wherever that the credit limit is only £3,000, but it's actually gone up to 3,100. Whenever you want you to make payments or go interest go over that credit limit of 3,000. Does that explain it for you? Perfect, lovely. So this bit's a bit more interactive. So you can check your credit score using NatWest. It's free and you don't have to bank with us. So you can check your credit score, get personalised tips to improve your score, view your full credit report, use the score predictor. This is a really quite a useful sort of bit in it. So you can put in there, if you are thinking of applying for any credit, say if you're thinking of applying for a credit card of 3,000, I'll use that example again, you can put it in the score predictor and it will tell you how it's going to affect your credit score by applying for that specific product. Then learn how credit score works. So it will teach you a little bit more of the basics on how it works and what to look out for, and discover how to meet your financial goals. So on there, if you put in a financial goal, it will tell you how we can potentially help you to meet it and what you can do to obviously get there a little bit faster. So now this is going on to a video about managing debt.
Debt isn't a dirty word, and not all debt is bad to have. Whatever your walk of life, the chances are that at some point you'll have some debt to manage. That could be anything from a mortgage to a credit card or loan. It can be a healthy and manageable position to be in, helping you build the life you want, providing you do actively manage it. So, how exactly do you do that? First things first, if this relates to future spending, be honest with yourself when it comes to going into debt in the first place. Do you have a plan in place for how you'll repay it? Is it definitely what you need to spend? Can you afford it alongside your other outgoings? Once you sense check that, make a plan for staying on top of your debt. Keeping a payments calendar is one easy way to keep track of things, with diarised reminders making sure you don't miss a trick. And always pay at least the minimum prepayment amount. That'll ensure you're not slipping into more debt. Of course, sometimes we may find ourselves in debt or struggling to make ends meet through circumstances we can't control, especially when other costs are going up, or if your situation changes. That can feel scary, but try not to panic. If you find yourself struggling to repay your debt, there is help out there. Banks are ready and willing to help you make a manageable plan. And there are lots of debt charities that can help you suss things out, including prioritising your debts and even seeing if there are 0% options to move your debts onto more manageable plans. Remember, asking for help is always a positive step.
So now we're going to talk about the debt spiral. So what are the steps to get out of the debt spiral? So what a debt spiral is where you're falling into that constant cycle of getting debt out and debt out and debt out to try and repay the other debt. So it then becomes sort of like a spiral. So you're sort of, it becomes a little bit more out of control. So do a debt audit. So look at all the debt that you have and prioritize your debt. So what ones would you like to clear off sooner rather than others? So it might be things with higher interest, running out of 0%, maybe smaller balances because you feel like you can achieve that first. Create a detailed and realistic budget. So obviously we spoke about that a little bit earlier in the workshop, having a look at budgeting and what you can do. Talk to people you owe money to. So a lot of lenders will sort out some sort of payment plans and see what they can do for you to help you pay down the debt a little bit better. And you can obviously get free and confidential advice. So Citizens Advice and lots of other debt management sort of charities can help you. There are other tips on how to do it. So here are some useful tips to help you get out of the debt spiral. So try the snowball method. So the snowball method is that you start with the smallest debt. So it might be an overdraft. You try and clear that first. And as your momentum builds about clearing off debt, hopefully you should then be able to tackle the bigger ones. So it's like a snowball rolling down a hill and getting bigger and bigger and bigger. So it means that hopefully you should start with the smallest and then be able to tackle the biggest towards the end. Move your finances. So this might mean moving, consolidating debt into a loan, which is the next one. But also it can be moving credit cards to 0% credit cards and other lenders because there might be a lower interest around it. Consolidating debt. So this means that you can consolidate multiple parts of debt. So it might be a credit card, a loan and an overdraft. And you can consolidate that into one. And then reach out for help. So here are some help charities and the places that you can go for help. So you've got your bank, Citizens Advice, Money Helper, Step Change, Pay Plan, Samaritans, Call and Shout. So depending obviously if you did need some help, these are the charities and organisations that will help you.
Chloe,
So
just before you move on, sorry.
Yeah,
just while on the finding supports page,
yeah.
I know that a few people or some people would say that, you know, getting help from maybe some of these people could mean or could have like a negative impact on your credit score. I just wanted you to clarify that. So if I get help from any of these guys, what is the impact for me?
So not all of them will be a negative impact on your credit score. Obviously, where they're thinking about the negative impact is them going into debt management plans, so like IVAs and things like that. Yes, that has a lasting long effect on your credit score for a period of time. But some of these are like Citizens Advice, so some people may just need help sitting down and working out their finances because they can't do it. Because some people are financially equipped to do that. It's like that's okay. Like not everyone is all for finances and understands it. And same like Money Helper, Step Change. Most of these will help you with actually sorting out your money. It doesn't necessarily mean that you're going into a debt management plan.
Okay.
Does that make sense?
Yeah, it does.
If you go to like the lenders, so say if you had a credit card and ask them for help, that is more of the stuff that they would do. They would put you on a debt management plan or a payment plan, which yes can affect your credit score. But these other ones are free advice and would sort of help you with what you needed. So it might not mean that you want a payment plan for your debt. It might mean you want help budgeting, so you do have that bit of money to pay it back each month. It could
right. Yeah.
Does that make sense?
Thank you. Yeah, it does.
So now we're just going to sort of recap with what we've gone over. So obviously we've gone over parts about how to budget, savings goals and strategies, and obviously borrowing basics. And obviously we did talk about a bit of debt and how to manage it. So now this opens the floor up a little bit on if there's any more questions. Obviously I know that there was a question about, I have a current account, can I open a savings account using the app? Was that for NatWest or was that for another provider?
They didn't say, but I think it would be better if you clarify for NatWest and then the other banks,
Yeah, that's fine. So most banks do allow you to open savings accounts online nowadays and through the mobile app. If you are with NatWest, yes, that's what we do. We can open products and services on the mobile app and online banking. But obviously, if you wanted a little bit more information about the products and services, especially with NatWest, you can come in and have a financial review, which is what I do for a job, where we'll talk about a range and we'll help you understand it. Other banks will offer similar things, but yes, you can mainly with banks open stuff online now. Any other questions about anything?
So I've got a question here from someone who would like to be anonymous. The person says that, is it advisable to use the buy now, pay later platforms? And do you think that some of them are related to loan sharks?
So the buy now, pay later platforms, I'm guessing they're speaking about are like Klarna, ClearPlay and things like that. So all I would say is like, they're fine to use, obviously, if you're using them responsibly. I'm not advice anyway, but obviously as long as you're using them responsibly and you're knowing what you're doing whilst you're doing it. What I will say is it can affect sometimes your credit score, so you do need to be a bit wary of it. So it can affect it in a negative way. I've had a customer before that I helped with a mortgage. They were ready to go. They had their deposit. They got their house offer accepted, everything like that. They then print out a statement, give it to the mortgage advisor, and there's Klarna payments going out left, right, and centre. Obviously, that can be deemed as, to some people, some lenders and things like that, that maybe you're not responsibly lending, or that you may rely on these types of products and services. So I'd be aware that that's what it can look like. But if you're worried about it, check your credit score with the NatWest. You don't have to bank with us, and just see what that Klarna is doing or that ClearPlay is doing to your credit score, because it will tell you on there.
Right, thanks a lot. I don't know if we've got any question from the floor. I've got a couple from Anonymous. Let me see. I can't see any hands raised up. Okay, so this person says, do you have any investment schemes for individuals that would like to invest? And what are some of the loan opportunities that NatWest offers to, say, students, for examples, or non-students, or to a community, Yeah.
Yeah, so I'll start with the first part with investments. So
Yeah.
we have a whole investment section in the NatWest, if that is something that you guys are interested in. We have 5 different types of investments, which are stocks and shares, in general investments, pensions, and 4 different types of investments. Stocks and shares, general investments, pensions, and junior ISAs. And they come at risk boundaries, and they're all on there. You can do a calculator online, but if someone wanted some more information about this, you're more than welcome to take all my information, and I would be happy to sit on a one-on-one with you to explain it, because it is quite a meaty piece about investments and things like that. So it is quite big. So if they wanted a financial review to go over that, I'm more than happy to do that. We've obviously you've got my contact details. I can do it over Zoom. It doesn't have to be face to face. Then loan options. I guess we're talking about more personal loans. So we do personal loans at NatWest. Obviously, you have to have an income to be able to get a loan. So for people that are students, obviously, if you're still working, then it would go through. But obviously, it does go on affordability. Community side of things, that would be through business. So I wouldn't know much about that. But if you wanted more information about business banking loans, that would be NatWest website under the business tab.
Right, thank you very much. So just to put it out there that Chloe is actually on board and ready to assist anyone that would like more information on investment opportunities and, just breaking it down for anyone. I've got our contact details. I'll just drop my email on the chat so that if it's something that you'd like, and I can pass that on to Chloe, and then she would arrange a meeting with you.
Yeah.
Is that fine? Yeah.
Yeah, so you can give over my email address. That's completely fine.
Oh, okay, perfect.
We have business cards that we give out, so that's completely fine. You don't have to bank with NatWest to have a meeting with me. So if people are worried that they can't have one because they don't bank with NatWest, that's not something that we sort of restrict ourselves to. We do for new customers. So if someone wanted a little bit more of a one-on-one session with me, I actually cover 5 different subjects in my reviews instead of just the 2 and 3 sort of sections that we've done here. So if they wanted a little bit more of a one-on-one, then we'd definitely be able to do that for you.
Yeah, perfect. I'll just get Chloe's email as well. Here's mine. I'll drop Chloe's email in a minute. But just while I'm trying to get that, I've got another question, and this is relating to I think savings, or the first parts that you mentioned today in this session, where I mentioned the issue of contribution that is common amongst African. So this person has said that there was like a roadblock when he wanted to purchase his first house. You know, so it was a case of a couple of friends came together, and when it was his turn to, you know, have the funds, the bulk funds, he wanted to use it as his deposit to purchase his first home. But you know, he wasn't able to, because obviously it was a case of he had to start explaining how this funds came up. Yeah, and all of those. Yes. So he just wanted clarification on that.
Yeah, so that is a common thing. So with mortgages, there's lots of underwriter work that goes behind it. So there's a lot of tracing back on the money that you have sitting in your account, because obviously they have to do due diligence around it to see that the money's okay and it's come from obviously like a legitimate source and things like that. And I'm not saying that they didn't think it came from that, but they have to do their processes. It's pretty much nationwide, like they will do it with all the mortgage lenders. So because obviously you had multiple people gift you money, that would be gifting. So that the way around that would be with the people who contributed to all write a letter and said that they've contributed this much into your mortgage. They do not wish for full payment back of that mortgage, because what it happens is it could be then a law thing that then obviously they can say, well, I put 3 grand into your house, I want it back, and you can't mortgage that money out or get that money out so quickly. So it's one of those things. It's just like when your parents gift you money, they have to write a gift of deposit letter to say that they won't ever receive money back for the house, and they don't want the money back that they gifted. So no, it is correct what they're saying. I just don't know whether they've explained it that way to you.
Right. Just you know, just a follow-up to the answer there. You know, you mentioned that it will be classified as gifting, but it's not gifting though, if you understand what I mean.
Yeah.
It's actually not gifting, because this is the monies that the person has contributed maybe months back, and it's just getting them from different people. Like I've contributed to several other people, and it is my turn now, and they have to contribute back to me. So if not, it's not gifting though. And then I know that there are also implications as to tax implications towards gifting. So how would you advise that this you know, this person navigates this kind of situation?
Yeah, so you would have to, I would say, one, the tax purposes, you'd need to seek an accountant or something like that advice with the tax, because obviously we don't do that. You also can go to specific lenders. Some lenders are not as strict with what they do as others. That's accurate, and things like that. Obviously, we are a responsible lender, so we do follow. Although you guys are saying that it's not gifting, and I completely understand, because I do really understand what you guys are talking about with contribution. But what it is, it does look like gifting to the bank, because people are paying in that money, and there's no sort of paper trace of the money as well. So it then becomes a little bit difficult to try and then back that up. But I would say either contact the mortgage advisors or mortgage lenders to see what their outlook on it is, and also seek an accountant or anything's information about where you can go with the tax purposes of getting that contribution back to you guys.
Right. Thank you so much, Chloe. I've got another question.
Yeah.
the person is just asking what you would call, or what score you would call a good credit score.
So obviously on R1, ours says it. So hold on, bear with me 1 second. I'll get the number. So obviously, if you're going to use the NatWest one, everyone's a different though. So it's not one score fits all.
Yes.
But they basically, our credit score comes up with the titles. Hold on, it comes up with needs attention, fair, and good. So good sits around the 600 in R1, but the maximum of ours is 710.
Right.
So does that make sense?
Yeah, I think it does. As a follow-up question from me, though, I just wanted to know, would you, as NatWest, would you borrow someone that is in the needs work category or fair category? Would you be willing to borrow such a lend to the person?
Yeah, it depends on the lending really, and things like that. Obviously, there are some certain restrictions, but my answer to that would to do an eligibility checker to see if you can lend for the stuff that you want, whether that being credit cards, overdrafts, or loans or mortgages. Most of it will do an eligibility checker before you going in to fully apply for it and doing a hard credit search. So that would be my little thing for you guys. If you are worried that your credit score isn't necessarily up to scratch, you can do an eligibility checker before doing it.
Right, thanks a lot. I think there's a question in the chat box.
Yeah.
Oluwamuyiwa says, I thought such contribution is called pool. I think that relates to the, contribution question.
Yeah, I wouldn't know that. I've never heard of it called pool. I've always heard of it called contribution. So I wouldn't know what it's called.
Right. Thank you. That's all the questions I've got from Anonymous. I don't know if there's any other person that has any question. Okay. I don't think there's anyone there.
No, that's fine. So
yeah, thanks a lot, Chloe. Thank you so much. It's been a very fantastic session, and I'm sure that a lot of people have, learned something today as regards, their debts, planning for the future, savings, and the likes. Thank you so much. We really do appreciate your time.
There is obviously a little QR code on there. I don't know if people have done it, but it does give a survey back to obviously how I've conducted the appointment. Obviously, Deborah has all of my email and everything in there, and it has been put in the chat today. If you guys do want any help or any reaching out, please let me know. And Deborah, you have my email, so any more sessions that want to be run, I'm more than happy to do that on different topics as I explained.
Fantastic. Yeah,
all right.
Thank you so much.
Lovely.
Thank you.
Thank you so much.
Yeah, so everyone, if we could please scan the QR code, just as a thank you to Chloe, because she's just here. We're not giving her anything back. So this is just like a thank you and a feedback as well. Just to, honest feedback is also appreciated.
Feedback's a gift.
Go ahead, Chloe.
Yeah, sorry, feedback's a gift. So any honest feedback would be perfect. This is actually my first session on my own. I run it before with 2 other colleagues. So we did break it up, and obviously this one's quite a meaty subject and everything like that. So this was the first time doing it on my own. So any feedback would be muchly appreciated, good, bad, or indifferent.
Fantastic. You've done absolutely well, to be honest. Yeah, thank you so much.
Thank you so much. Thank you so much, guys, for having me. And the QR code should be on the screen in front of you. It says,
I can see it. Yeah, I can see the
QR
someone
code. Put it on the chat. I'm just reading it.
Okay. I can see that. Yeah. Please, where is the QR code? If you could just open whether you're using your phone, if you open your Zoom app, you see it's on the screen. Okay. Yeah, same. Yeah, thank you.
Thank you so much, guys, for your time. And as I said, anytime you can reach out to me, and I'm more than happy to help.